I think there's a couple of things on the table. Margins always, certainly, and you allude to in the lead-in. Profits are part of the story. The profit pivot has really started to come in a big way for Amazon, so we look for continued momentum there. I would say this quarter, more than maybe some recently, the growth in online sales is, I think, a metric that I'm at least watching closely because the guidance was a little bit softer than it had been typically. And I think that is sort of the umbrella from which a lot of the other mix-related businesses fall under. So we're watching for consistent growth in online sales as well.
In terms of that guidance, Rob, a lot of investors at the last earnings were sort of caught off guard, given that the fourth quarter was supposed to be a very strong quarter for Amazon. And I'm wondering if you have a handle as to why they would give that guidance so early on, especially, and if you're concerned because when they gave that guidance, we hadn't seen the sort of market volatility that we saw in December, which may have taken a hit on consumer confidence and maybe exacerbated whatever sales slowdown they might have been anticipating.
Yeah. Yeah, well, a couple of things. One is, I think, important to recognize that the step down in growth rate because of the anniversary of the Whole Foods acquisition. So on the headline, it looks like a bigger deceleration than it was on an organic basis. That's one. Two, the mix shift away from the first-party sales to third-party sales is something I think they would like to give themselves room to get a richer mix, to Bill Miller's comment on the intro. That's what they're looking for. And then finally, I think just in terms of capacity and supply, they want to make sure that they're not overextending and make sure that the street isn't getting ahead of themselves. That's the way I analyze the setup on their guidance coming in.
In their last quarter, they were a little shy on revenues in a couple of segments, but their EPS number beat. What do you think? What are you looking for this time? Will they repeat that, or will they be a little different? Will it look different?
Yeah. The top line bar might be a little lower because of that soft guide. So I think there's a little more opportunity for a better top line number. And I think the season looks pretty strong. I think they're in a position to fulfill. They put a lot of capacity in the previous 2 years. That capacity is really humming right now. And I think the demand side of the equation on the Prime membership acquisition looks very robust. So I think it adds up to probably a strong top line result from Amazon tonight.
Rob, let me ask you about Facebook. If we could take a look at that stock today and just its incredible rally, really. We know this was one of the stocks that got taken to the cleaners in the fourth quarter. At one point, it was trading, I don't know, probably below 17 times forward earnings. How does Facebook's valuation look to you now? And are you concerned at all about, this app with the kids who are giving them the data for $20 a month and what that tells you about how they're running things?
Yeah. So there's a lot in that one. I think the valuation still has a long way to come back to what should be considered normal if there weren't all these external factors and scrutiny and a perception of an engagement problem. So we're still trading, somewhat below 20 times forward 12-month earnings. So I think there's still an upward bias on valuation as sentiment continues to improve. Now, things like the aforementioned headlines today with Apple and the kids, it's a questionable looking practice. I think at the end of the day, they're trying to gather information and query their audience for, which is just market intelligence. I don't think anything nefarious going on there. Maybe outside of Apple's terms and conditions, and that's really where the friction is.